What is Bitcoin backed by? You hear that all the time because people think it's magic internet money created out of nothing, backed by nothing. Therefore, it's just a Ponzi scheme and it has no value and it will come crashing down to zero. So you shouldn't speculate on it or buy it. A lot of people think that. And in this video, I'm going to explain all the fundamental misconceptions about those ideas, starting with the question of what is Bitcoin backed by. And to better understand that, we're going to talk a little bit about the history of money. We're going to understand gold, fiat money, and what the term backed by even means. And by the end, you will understand what Bitcoin is backed by and why Bitcoin has value as money. First, real quick, my name is John from My Favorite Thing About Bitcoin. Been studying Bitcoin for several years, created this channel with the goal of helping other people better understand and grow their conviction in Bitcoin. If that sounds like something you might be interested in, go ahead and hit the subscribe button and we'll get into the video. What is Bitcoin backed by? So to understand the answer to that question, you first have to understand what does backed by mean. So historically, we typically think of that as a fiat currency backed by a hard commodity. The dollar backed by gold, right? And when the dollar was backed by gold, this part's important, it specifically meant redeemable for gold. So a dollar was essentially a coupon that was a claim on an exact, specific, actual amount of gold held by the Federal Reserve that you could exchange your dollar note for that exact amount of gold and redeem it for the gold and get the gold back. And that was what gave the dollar its value, because it was just an IOU, a coupon that people could trade amongst each other to make it easier to trade gold, the commodity that had the actual value. But gold was obviously harder to carry around, harder to divide. So you create these paper notes on top of gold that are IOUs for gold and let people transact more easily to use gold as a medium of exchange with an extracted layer of paper currency on top of it. Does that make sense? So the paper currency is backed by the value of gold. But make sure you see that the dollar was backed by gold in the sense that the gold backing it helps to maintain the value of the dollar relative to goods and services you want to buy with it. And the reason for that is, you know that it's harder for governments to increase the supply of the gold itself than it is for them to increase the supply of the physical notes. So the paper notes, the fiat currency, had to be backed by something else that was known to be a hard commodity that stored value, because the gold stores value. And so the paper notes were supposed to be one-to-one backed by an exact amount of gold. And therefore, we wouldn't have to trust that they wouldn't create more paper notes than they had gold to back it. And that's how the paper notes themselves could store their value. Only if the relationship to the gold backing them stays tied together. But of course, what happens? They start creating more paper notes. Now they do it digitally. But whether it's paper or digital, then they had actual gold to back the notes. So the notes themselves start losing value in purchasing power terms relative to the goods and services you want to buy with them. But if the dollars, the pieces of paper, were good enough at storing value in the first place, they wouldn't have needed to be backed by something else. But obviously, by definition, the fact that they needed to be backed by something else when they were introduced tells you that they themselves were not good at storing value. Now, go one step back to the gold piece. What was gold backed by? What is gold backed by? When gold was used as money, now when gold's used today as a store of value or a reserve asset, what is it backed by? It's not backed by anything, because gold, as Eric Yates said, money is not backed by something valuable. Money is something valuable. Gold is not backed by anything else because gold was the commodity itself that had the necessary properties that money needs to have to A, function as money, and B, store its value successfully into the future. So there you go. You have clear two examples. Gold not backed by anything else because it's capable of storing its value on its own, and fiat currency needed to be backed by, tied to, a hard commodity like gold because fiat currency is not capable of storing its value into the future. If you want to get deep into the semantics of what is gold backed by, I would argue the only answer to the question, what is gold backed by, it's backed by the properties that a commodity needs to have in order to be successfully used as money. Money is a technology. Any commodity can be tried as money, and if the commodity has a certain set of properties, it may become successful at becoming that technology that we call money. So gold has those properties. Namely, they are, it's durable, it's portable, it's divisible, it's fungible, it's verifiable, and it's scarce. Any commodity that has those properties can attempt to enter into the free market competition of monies, and then those commodities compete against each other. And the last property, the scarcity, which basically means the stock to flow ratio is higher, which means the inflation rate is lower. So it's harder to inflate the existing supply and create more of it. Whichever commodity best fulfills the first 5 properties and is the one that it's hardest to create more of relative to the existing supply will win out as a better form of money. I hope you're following me. Gold defeated other commodities because of its ability to store value better into the future. And that's why gold became the #1 store of value. Again, not backed by anything else. It had the necessary properties it needed to have to become money and to store value into the future. So obviously, like I said, when fiat currency was introduced, it needed to be backed by another hard commodity because it was obvious if you just introduced paper notes backed by nothing, why would they store any value? The only thing that would potentially give them some semblance of value would be legal tender laws, basically, so the government requiring you to use it as a medium of exchange, and then the supposed trust that the government's not going to inflate the supply of them too quickly. But if the government promises it's backed by a hard commodity like gold, then you have this perception of trust that, oh, I can redeem the dollar for the gold. If that remains true, then I at least know I have a mechanism to keep the government honest, to keep them accountable, that the notes they're printing are redeemable for the gold, and they're not creating way too many notes that can't actually be redeemed for the gold. Now, obviously, we know history that that's exactly what happened. They started creating more notes than they had gold to back them. And when people started calling them on doing that, first in 1933, Executive Order 6102 ended the public's ability to convert the dollar into gold and made it illegal for private individuals to hold most forms of gold. Actually required U.S. citizens to hand over their gold to the government. And if it was already in a bank, they just confiscated it, said that's ours now. When they did that, gold was valued at $20.67 per ounce. So prior to 1933, dollars were redeemable for gold at a rate of $20.67 per ounce. That was a fixed rate. Well, the government had obviously created more fiat currency than they had gold to back it, so they confiscated all the gold, and promptly, what did they do the next year? The official price of gold was raised to $35 an ounce. Now, that always sounds like a positive thing, like, oh, gold got more valuable, so if you held gold, you made money. Well, first of all, they confiscated all your gold before they did that, and then promptly devalued the dollar against that gold by 40%. That's akin to essentially 40% inflation overnight. They devalued the dollars by 40% against the hard commodity. That was the only thing that was giving the dollars their value in the first place. It's insane. Quick pause. I just want to say, if you're liking the video, hit subscribe, hit the like button. You can zap me sats via your Lightning wallet with the QR code on the screen. Leave a comment or question or drop an idea for a future video in the comment section, and back to the video. And then later, of course, as we know, in 1971, Nixon officially, well, he actually, if you watch the speech, he temporarily removed the dollar's convertibility to gold for other nations. What could possibly be more permanent than a temporary promise from the government? Because, of course, it's been permanent. And that was the final sever in the tether of the dollar to redeemability of gold. So the dollar no longer was backed by gold. All right? Remember, backed by meant redeemable for gold. And it was backed by gold because that helped maintain its value in purchasing power terms relative to the goods, services, and assets you want to buy with those dollars. That part is important because today, if you ask most people, and I know because I've done this and I've gotten tons of comments, what is the dollar backed by? People will tell you it's backed by the U.S. military. It's backed by the full faith and credit of the U.S. government. It's backed by the entire U.S. economy. It's backed by oil. It's backed by violence. It's backed by guns. It's backed by steel. And some people, by the way, still think the dollar is backed by gold, which is its own problem. You will get all kinds of crazy answer of what the U.S. dollar is backed by. Now, what I surmised from getting all those answers is people think, what is the dollar backed by? They think you're asking what maintains the dollar's role as the global reserve currency. What makes it stronger than other fiat currencies? What makes it something that is in demand from other countries to use it? Why do they buy our treasuries? Why do they use our dollars? Why is there demand for it in the global economic sense? Remember, that's not what it meant when the dollar was backed by gold. It meant to maintain the value of its purchasing power. But today, most people, what is the dollar backed by? The full faith and credit of the U.S. government or the military. That's what they'll say. Do you understand the disconnect? Neither of those two things maintains the dollar's value in terms of its purchasing power relative to goods and services you want to buy with it. So the misunderstanding and the misconstruing of what backed by means allows for the devaluation of the dollar when people don't understand that it's supposed to be backed by something, a hard commodity that can't lose value as fast as the dollar can lose value. Because obviously, you can't redeem your dollars for your share of the U.S. military. So now that we understand what gold was backed by, why fiat currency needed to be backed by gold in order to have value, we come to the question of what is Bitcoin backed by? The answer, now critics will love to hear this answer, and you could just clip this one sentence that I'm going to say and go to say that means Bitcoin has no value. Bitcoin is not backed by anything. Why? Gold was not backed by anything because Bitcoin is money. Remember, money isn't backed by something valuable. Money is something valuable. So the gold wasn't backed by anything other than the properties it needed to have to store value. And Bitcoin is digital gold. It was engineered to have those same properties and to store value for the same reasons. A lot of Bitcoiners, I think, give a confusing answer to this question. They'll say it's backed by energy. It's backed by the strongest computing network in the world. It's backed by math. It's backed by code. It's backed by swarms of cyber hornets. Whatever you want to say. I think all those answers are wrong and confusing because the real answer is Bitcoin is not backed by anything because it has the properties it needs to have to fulfill the technology of money and to store value into the future, the same way any other hard commodity needed to have those same properties to do the same function. It just happens to be the first digital commodity that can do that, as opposed to physical commodity that can do that. Bitcoin is durable, portable, divisible, fungible, verifiable, and scarce. And if you go through the list of properties, it beats gold on a number of them. Obviously, divisibility, portability in a digital age, and scarcity, because the total overall supply is fixed, ends at 21 million, and then there can never be more created after that. So if you own a share in that network, you can store your value better into the future than you could if you own a share of the gold network, because the gold supply is inflating and can inflate forever. As far as we know, we could start mining more gold out of the ground, more gold off asteroids. Who knows what the limit is to how much gold there is? We don't know. So Bitcoin is not backed by energy. You can't redeem it for your share of energy. It's not backed by a computer network. You can't redeem it for your share of the network. Same way gold's not backed by anything. You don't need to redeem gold for anything else. You store value in gold. You store value in Bitcoin in the same way. And remember, backed by is about storing purchasing power, storing real world value against the goods and services and assets you want to buy with it. Gold does this successfully. Bitcoin does this successfully. Fiat does not. So the same way gold entered into a free market competition against other forms of money or stores of value in the past, and it defeated them, salt, tobacco, copper, beads, shells, you name it. These are all things human beings had used as money, but they became demonetized when they went into the free market competition up against other forms of money. The harder form of money won and devalued the weaker form of money. So Bitcoin, 16 years ago, entered into the free market competition of monies. And what's it been doing ever since? Sucking all the value out of other forms of money and other stores of value. Because Bitcoin goes up in value in relative terms against everything else. Bitcoin increasing in fiat dollar denominated terms. It's also increasing in value of homes, the value of gold. How many houses can you get for Bitcoin? More than you could 10 years ago, more than you could 5 years ago. How much gold can you get for Bitcoin? More than you could in the past, right? It's going up in value in terms of everything else because it's defeating those things as money and as stores of value in the free market competition of monies. It's sucking the value out of them. I just did a breakdown of J.L. Collins, who wrote The Simple Path to Wealth on Hassan Minhaj podcast, he was talking about why Bitcoin is just a speculative asset and it's not an investment. And I did a whole breakdown, and I think that the point is really salient of why everyone thinks Bitcoin is the greater fool theory. You're only buying it to try to sell it to some other idiot for more than you paid for it in the future. And my whole argument was Bitcoin's actually the only thing that's not the greater fool theory. Stocks, real estate, gold, all these things, you do buy them and hope somebody else will pay you more for them in the future. And Bitcoin, you buy it and hope you never have to trade it back into fiat because fiat is devaluing faster than Bitcoin. When you're exiting a weaker form of money for a harder form of money, you don't ever want to go back. The analogy is if you're exiting Venezuelan bolivar or Argentine peso because they're hyperinflating, your goal is not to exit pesos for dollars and then wait till someone will give you more pesos for dollars and then switch back. Obviously not. Your goal is to exit a weak form of money for a hard form of money and then remain in the harder form of money because it'll store your value longer. And then your hope is you just use it as money. You use it to store value and then you use it as a medium of exchange when you need to buy something. So with Bitcoin, as you just see more merchant adoption, more medium of exchange adoption, you're just storing value in it and then waiting for when the time comes when you need to buy goods and services with it. And then you try to get the merchant to accept Bitcoin or the payment processor to accept Bitcoin in exchange for those goods and services. You don't want to switch back to dirty debasing fiat. You just want to stay in harder money and then use it as a medium of exchange when you need to buy things with it. So bottom line, if you think fiat money is backed by the military or the faith of the government, you don't understand what backed by meant. If you think Bitcoin needs to be backed by something else, you don't understand money. You need to study gold and the properties that made gold and other monies good stores of value, and then you'll understand Bitcoin. Now, this process is going to continue, whether you like it or not, whether I like it, whether other people want it to or not. Bitcoin will continue to demonetize other forms of money and other stores of value because it is superior money. As Cole Walmsley has said on my recent interview, it is the black hole of monetary liquidity. It's the apex predator of monies. It will continue to suck up all the value, the monetary premium, and the monetary liquidity in the world from other stores of value and other forms of money as time goes on. So you might want to study Bitcoin. Potentially, you might want to get your hands on some Bitcoin if you want to hold the hardest form of money that's ever existed. If you think you're too late to Bitcoin, it's already $120,000, etc., you're going to want to watch this video right here where I explain you're not too late at all. And of course, thanks for watching the video. Hit subscribe, hit the like button, because as always, you never want to forget that Bitcoin is inevitable.